Good morning, good afternoon, and welcome again to the latest ADM Agriculture YouTube market update. Well, this is going to be the last one of the year, so thank you to all of our subscribers and regular watchers for tuning in to our YouTube video channel. Well, it's been a very interesting year this year. Huge amount to talk about, huge amounts of volatility. All kicked off by the war in Ukraine in early February, running into March, which sparked the biggest rally that we've seen in the market since 2008. And then that combined with the drought conditions throughout Northern Europe during the summer, and of course the US, just compounded those issues until we saw grain prices peak in mid-May at near record high levels. So what's the future got to hold? Well, since that mid-May rally, we've seen prices come off. The market is starting to get on top of the overall supply and demand and have a better understanding of what's coming. If we look at what's happened recently, well, last Friday's USDA, certainly from my point of view, I was hoping for something exciting out of last Friday's numbers, but to be honest, the USDA didn't really do a lot and the report was largely benign. There were no major changes in the world S&D, just some small downward adjustments in the 2022-23 ending stocks. The USDA did cut their estimates for the Argentine wheat crop, although I guess we would probably say the USDA's number was too high to start with. And the Aussie crop number from USDA was raised in line with ARBA's domestic forecast as well. In the US, the market continues to be impacted negatively by their lack of export competitiveness. Although yesterday's export figures were above trade expectations, in reality, the cheap Russian offers and domestic logistical issues have kept the US out of the export market, and they remain behind the curve when it comes to export pace. And I guess the negative slant to the market is also being compounded by the bigger than expected Australian crop. And then, of course, overarching concerns about global recession and medium-term demand. Here in the UK, this demand destruction is being really exacerbated by bird flu. We've seen a significant amount of grain that was supposed to be consumed during Q4 getting rolled to Q1 as a result of this bird flu. And the cut in the pig herd that we saw back in the summer, we're also expecting to really bite as we go into Q1 and Q2 next year. A bit like the US, the UK remains really behind the curve on exports, and our export competitiveness is a struggle. Looking at the numbers, and the October export figure only at 65,000 tonnes, according to HMRC, which was released this week, makes us think that the export number to the end of the calendar year, the July deck figure, could be as little as 550,000 tonnes, which could leave us as much as 1.8 million tonnes to ship June next year. That's a big ask, and really puts the UK in a potentially bearish situation. I suppose the final comment, and what was really the big news of the week, was the big fall we saw in sterling yesterday. Bank of England raised interest rates by another 0.5% up to 3.5%, the highest level in 14 years. I think what was interesting, though, it was the MPC members were big time split over how they wanted to increase rates. It's clear there's a divide starting to emerge within the Monetary Policy Committee, which I guess potentially contributed to the unsettling of the FX markets. Or maybe it could just be a buy the rumour, sell the fact. Either way, the pound has lost a lot of ground since yesterday, trading from 116.50 down to 114. Hopefully, this will help get some exports going as we go into the new year. Anyway, look, that's all from me for today. Hopefully that summary is useful. As always, we're interested to hear from our listeners, our viewers. So the contact details are at the end of the video. Otherwise, we'd like to wish all of our viewers a very Merry Christmas and a peaceful New Year. Thanks again.